Willkommen, liebe Investoren, Spekulanten und Trader. Heute schauen wir uns den Bitcoin mal genauer an mit einem der besten Experten, die es für Elliott Wave im Markt gibt, meinem Kollegen Nick Themistocles. Ihr kennt Nick aus dem Grey Market Talk. Genießt es. Ho, 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 it's magic. I already promised in the intro one of the best experts on Bitcoin, and I'm saying that as somebody who's never ever touched that stuff in his whole life. However, for a couple of weeks now, Nick gives relatively good, I'm underselling you here, recommendations based on Elliott Wave in my virtual trading floor, which is open to our former students. And 2 weeks ago, he exactly counted the waves in a way pattern, you will correct me, Nick, where we are today. So I got curious. If somebody is able to divine the future, I want to know how that works. So thank you for being here, Nick.
It's a pleasure.
Quick introduction. Again, I almost forgot that. Nick's background, for everybody who hasn't seen that before, Nick used to be a market maker for bonds, a chief trader, a chief investment officer with about 70 billion, I think I got it correct now, assets under management.
Finally.
And is at the moment, as I see, a Bitcoin trading golfer, right? Is that correct?
Yeah, the golfer thing, you're certainly right about.
So, fine. Thank you very much, Nick, for giving us the time. And as I said, I was quite impressed about, you call it your counts in Elliott Wave. And I've neither traded Bitcoin, nor have I actually put ever much work into Elliott Wave. But the more I see the results you're predicting here, not just on Bitcoin, but also on the other markets, the more and more I get interested in. So I thought now that we have reached exactly the level you were predicting in your last count 2 weeks ago, I want to know what happens next. I've already looked up various stuff, and we can do that in a later video, how to trade that best. But I'm handing over the bridge to you now to give us an idea. What's happening next in Bitcoin, Nick?
Okay, well, let's start sharing the screen and tell a story, perhaps. Let's go firstly to TradingView. So what you're seeing here is we had a question, actually, after one of our last videos on Bitcoin about the correlation Bitcoin and NASDAQ. So I thought, I may be a bit late, sort of a couple of months late on the question, but I thought it's a good opportunity at least to say, is there a correlation? How close do these things trade? So let's just, put up Bitcoin and NASDAQ. So Bitcoin in red. This is a history since 2021. It's not brilliant, long history, but 2021 in red, Bitcoin, NASDAQ in blue, but they kind of go up and down together. This is, not something that you would say is identical, but here is a correlation panel down here, the first panel, which shows you the sort of 120-day daily correlation between the two. When it's green, it's sort of positive correlation. When it's near the top, it's 100% correlated. And you can see generally this thing does Bitcoin does trade fairly close to where NASDAQ is. But as you can see, this thing is tailing off right now, and it's tailing off right now. So the correlation is getting weaker because the NASDAQ is still bid as the, people are rotating still to these, communication and technology stocks and the like. Whereas Bitcoin's going through this consolidation, and we spoke about consolidation because of cycles, but we'll talk about that in a minute. The other correlation that I put up here is Coinbase. So Coinbase I now add in orange. Coinbase is one of the largest exchanges out there, and obviously its own earnings is linked to the fortunes of the crypto market. So when crypto goes down, Coinbase tends to go down and vice versa. And you can see on this bottom panel here, there's a much closer correlation, put it this way. It's more often, very highly correlated and hardly ever not correlated. So, Coinbase is a good kind of proxy for those people who don't want to touch Bitcoin because they don't really, want to be involved in crypto per se, but might want to look at equities that are affected by Bitcoin. There are other equities out there. MicroStrategy is another one, but that's a different story. Firstly, how does Bitcoin trade versus the rest of the market? The other thing we talked about a while ago was Bitcoin dominance and Ethereum dominance. And when we did the video, I honestly can't remember when that was, but it was some time ago, but not so long ago. So if I sort of bring my cursor down here to about March, and when I did this Elliott wave count on Bitcoin dominance, and what does Bitcoin dominance mean? So the market size of the crypto market is, let's just say, 2 and a bit trillion. And how much of that is Bitcoin? So you can see it's currently, it says here, 54%, 55% of the crypto market is Bitcoin. Well, what's everything else? It's Ethereum. It's the top 10. Have also a very large percentage share, but nowhere near as large as Bitcoin. And the kind of the message from the Elliott wave count, put it this way, was that over time this Bitcoin dominance would fade. And what would that mean? It would mean that other things become more dominant in the crypto market. And what's that? That's the altcoins and use cases, real use cases, if you like. And when we were talking about the Bitcoin dominance at that time, let's just say I think it was the beginning of the year, so Bitcoin dominance was around 54%, slightly higher now, but still the message was somewhere here it was going to peak. And it's, you can see this retracement level here. Fibonacci plays a big role, obviously, in Elliott wave. 50% of this retracement from the last big move down is exactly where we are in Bitcoin dominance. So still expecting this to hold. And what that would mean is if crypto does continue to rally, Bitcoin will chug along, but there'll be other things that potentially would be, let's just say, a better performing than Bitcoin. And the next sort of most popular crypto out there, obviously, is Ethereum. And at the time, I said, well, it looks like a triangle, and I think this wave C was up here. And I said, wave E is not allowed to cross wave C. Well, it did, so therefore wave C was not over. So here's wave C, doing wave D. It's quite early to call a triangle, but it kind of looks that way to me. And this has been going on for since 2021. So Ethereum rallies as its dominance moves from 15% up towards where it is now 18 or 19%. And then, the idea is that there will be, again, another one of these sell-offs in Ethereum before that finds a low here in, the triangles appear only in wave 4 in Elliott wave or wave Bs. And then it will rally and will become more dominant. And that would be probably the time when Bitcoin dominance falls.
Question from a beginner here, which would be me. Does dominance equal prices going up?
Yeah, pretty much.
All right.
I mean, if you can imagine, the size of the crypto market is defined by the amount of tokens there are out there, coins, however you want to call them. And, if there are a flood of tokens out there, then the whole crypto market is getting, let's just say, larger if they are sort of start to perform or if they start to get interest. And Bitcoin then just automatically would be diluted. And when it's diluted, it doesn't really mean the price is going up. But at the moment, you're not really seeing a flood of new tokens out there which are suddenly getting traction, like Solana last year or the year before. These things are kind of very small and are not really large enough, or what's going on is not really large enough to kind of dilute Bitcoin. So therefore, when I talk about dominance increasing, then I would say, yes, prices would be going up. But there is another way that, you could have sort of dominance without, and that's sort of depending on the size of the overall market, coins disappearing or coins coming onto the market. But yeah, I mean, that's the idea. And the size of the market is 2.5 trillion or thereabouts.
There's a background to my question, because if one of the Bitcoins gets dominant, means the others, by definition, have to get less dominant. However, what we've seen is they usually, I might be completely wrong, go in the same direction. Either anybody wants to have coins or nobody wants to have them. So could that actually imply that spreading is an option for the future as well?
When you say spreading, spread trades, you mean?
Yeah.
Relative value trades. Oh, yeah. I mean, I think this is, once the market becomes, got a little bit more traction, once people start to get used to trading this stuff, and I would say we are really very early days, because for this to happen, you need many more institutions, in my view, involved in this thing than there are today. And institutions, not just investors, but institutions putting money to work, institutions playing a role, custody for retail, for pension funds, whoever wants to get active in this thing. There just aren't enough, still not enough players, in my view, in this thing for for that to happen. Nevertheless, when people sort of start to put bets on, they see Bitcoin go down, they go and sell, Cardano or Ethereum or XRP or some other crypto. So there is already a lot of this going on. People have to hedge their positions. And so, if you're very long of one crypto and you're sort of worried and there might not be enough liquidity in that thing, then you do see people playing the other coins in order to hedge themselves.
All right, thank you.
So that was a bit of background, but you can see this dominance thing has hardly moved, which means that the whole market is kind of moving up and down together with where Bitcoin is, where Bitcoin is getting slightly more dominant, but not enough to get us really super excited. And that in itself is quite interesting, because since the early part of the year, when everyone was talking about the ETFs, and these are just Bitcoin ETFs, right? They're not other coin ETFs. Bitcoin ETF, that has not increased the dominance of Bitcoin. What it's done is it's given more attention to the whole crypto market, and that's why Bitcoin dominance has kind of gone nowhere whilst it's had an ETF, but the other coins have obviously benefited. Okay, let's just look at what's going on with Bitcoin.
So I could rate that as a neutral at the moment, right?
As a neutral, what, in terms of dominance?
Yeah.
Yeah, I mean, it's that's right. I mean, on my kind of Elliott wave thing, where it's kind of retraced to 50%, I see that as a resistance level for Bitcoin. And so for now, I think what's going on is, as the crypto market is sort of consolidating lower, the Bitcoin dominance is just Bitcoin's falling and everything else is falling with it together. But as I say, the idea is that Bitcoin becomes less dominant as more use cases on blockchain and the like start to become more interesting to institutional investors. So the story of most things, right? I mean, NASDAQ, S&P, all of this financial instruments, there was a pretty critical time in the market. And the first critical time was in October 22. And the next critical time was in October or September 23. And you can see the October 22 was a critical low for Bitcoin. You can see that down here. Bitcoin was trading then around 15,000. And then after it rallied and came back down in, sort of what I called a wave one in this particular version and into a wave two. At that stage, Bitcoin was 23 or 24,000 before the next major rally. And I think this was when the S&P was around 4,103 as a low, and then, everything took off. And you can see Bitcoin goes with it. Or, when there's liquidity in the system, assets start to get a bid. And liquidity is drying up right now. You can see that actually in, I would say this is not a negative thing per se, but it's not expanding. And that's kind of making a lot of markets looking a bit sluggish and a bit vulnerable, in my view. And you can, Bitcoin is sort of very vulnerable, it seems, to levels of liquidity. And the other thing that you can identify for liquidity shortages and surpluses is by looking at the dollar, the Dixie, the dollar index. Dollar index is rallying right now, so dollar index is almost 106, close to 106. It's signs of that there's really not a lot of liquidity in the system, and that's affecting things like Bitcoin and not yet Nasdaq. We'll see whether that can continue to rally in the face of this, but also S&P, and you see some sectors kind of holding back right now. So liquidity is in my view affecting where Bitcoin's going. But when we talked in your sort of group about Bitcoin and the level and what to look for, one of the other drivers was most people were talking to me with Bitcoin down here saying, oh, should I get in? And I'd been responding, in May, I said, leave it till August. And I kind of sort of held this kind of August level. And that always made me wonder when I started to see Bitcoin price rally, because, we were still not in August. And, this thing looked like it was, ready to go. But sure enough, the market's come back down, and we're not in August. And why August? August is an important time. Before we get on to Elliott wave count, just to put it into perspective, important to look at cycles, market cycles. I don't want to look at that. So we look at market cycles. I think this is the so. This is from the Foundation of Study of Cycles, and it's based, this actual kind of cycle account is based on work done by Lars von Tienen. And in his analysis, he said that Bitcoin follows a kind of a 5-3-5 pattern. For Elliott wave fans out there, you've got to say, oh my God, Elliott wave is 5-3-5, and it's also in the cycles as well, what's going on. And what he discovered was that when Bitcoin is bullish, it follows 5 cycles of 200 days up. And when Bitcoin is bearish, it follows 3 cycles down. And now we are in one of the bullish cycles. And that bullish cycle, we are in the 3rd bullish cycle. You can see this is, you can't count them, but this was the low in Bitcoin talked about here. In November 22, October 22. So the first cycle up of 200 days. I know it says 192, but just, bear with me. Wave cycle 1, cycle 2, and we're in cycle 3 now. And cycle 3, at the top of cycle 3, means that Bitcoin is facing on this particular cycle. It doesn't mean it's the for cycle addicts out there, this is not the dominant cycle for Bitcoin. Nevertheless, if it's always there and it's something that you can, it's a kind of a standing cycle, you really want to know where this cycle is. And that's why in May, when people said, when can I buy Bitcoin? I was like, in August, right? And why? Because, down here, the bottom of the cycle, of this 200-day cycle, is August. Now, these things don't usually sort of hit exactly the low. I mean, you can see that here. But you're going to be sort of plus or minus on this thing. And certainly May is far too early to say that, it's just some significant low and you should buy it, just because it feels good.
So it's stuck in my memory. I just checked. You gave your talk on the 10th of June. We were just short of 70,000. And you actually, that's why I noted it down. You said next stop should be around 60,000, where we are now. And that got me all excited because you even predicted a little bit lower, but still had a long-term positive view. If I look at this cycle now, Nick, obviously it's intimidating to see the cycle going down now in a big move.
Yeah.
How do you explain that to me as a Bitcoin new discoverer?
Yes. Okay. So I talked about 200-day cycle. Now, this is not really meant to be a cycle talk, because you should really follow the foundation of study of cycles, because Lars von Tienen is really the expert on this thing. But this is a standing cycle, if you like. This is the 200-day cycle is something that he said is, or he believes is always there. So it's in the background. So we know that there is either headwind or tailwind from this cycle. There are other cycles that play all the time, and I'll show you in a moment the current cycle. But in a bull market, you see that down here, to help you with your intimidation, as it were, the low of this cycle was in 22. Now we've had a down cycle here, this one here. We had another down cycle here. You can see, if I don't know, I hope you can see the cursor. And in those down cycles, Bitcoin price went up. I mean, it didn't go down. So the point is that sometimes in these patterns where there are a series of cycles to end the pattern, that what you see, and I noticed it also in when I was looking at treasuries on some time ago, that when the market is trending, that these down phases in the cycle just become like a consolidation, a sideways pattern, and not necessarily in as a sort of down or up the other way, depending on how you're looking at it. So it's right to be intimidated, but it's also possible that this thing just kind of plays around up here until the cycle low is formed, and then the thing goes up, right? So, and as I say, I mean, we had a high here of 73, and we had a low here of, what was that, 50, 58. And it's quite a wide span. If you're used to sort of short-term moves, that's quite a big move. But for crypto, it's kind of, got to get used to it. That's all I can say. And this thing might just trade around for a while until this headwind, if you like, that it's got suddenly becomes a tailwind. The way that cycles operate, and this is now the current cycle, that what I'm showing here. So let's go quickly back to this one. You see this one, you can't see it. I'm looking back 5,094 bars on this thing, 5,094 days worth of Bitcoin trading. That's not very clever to analyze cycles in such a way, because there are always different influences. And so this 192 days I'm taking is kind of the average cycle over that period of time. So what you really want to know is what's the current cycle. And for that, I'm looking back 987 days. That might still also be a bit too large, and therefore it might be bringing in too much averaging, but it's a lot less. And, according to Lars, he says stick to around 850 or somewhere close to that. And I think 987, I picked it because it was close to a significant turning point in prices. So in the current cycle.
Well, that makes me want to buy the shit out of it, Nick.
Whoa. Okay, so in the current cycle, you can see that the two dominant cycles here are in green. And the one is a 146-day cycle, and the other one, if I take this off and just show the 122-day cycle, they're both heading in an upward direction up until August again. That famous point in August. So the current cycles give us a kind of a different perspective to the average cycle. But remember, the average cycle, as I say, this thing could just trade sideways, maybe head back towards high 60s, until it finds its sort of low point from an Elliott perspective, and then find a point to rally. So I think let's put some context to this thing now and go back to, some kind of Elliott wave chart. I must say, I've got here about 4 or 5 different alternatives. I'm not going to go through all of them, but the themes are sort of fairly kind of consistent here. That this particular count, for the people who know about Elliott wave goes up to 5 waves, and then 3 waves down, then 5 waves up, 3 waves down, and there is a kind of a bullish way to look at Elliott wave, and you can say, well, 1, 2, and instead of saying 3, the next number, you can start again. You can say, okay, I'll do a 1 again, then a 2 again, and actually I'm going to start again, 1 again, 2 again. And what that would mean is that you'd have to complete 3, 4, 5, and then 4, 5, 4, 5, and that's a super bullish count. And so for people who are ultra bullish and talk about 500,000, that's probably how they would look at this thing, that every pullback is the start of a new wave. Now, I've got this here. It's not my favorite account. It's certainly not the way that I will be trading this thing for different reasons. But so this is another count, again, starting from that level in 2022, where we say 1, 2, and then sort of a 3 up here. Now, I kind of didn't like this kind of count because this 4, if you like, that I've got here is way, way bigger than this 2. And for that reason, I thought, okay, I can start to add things to this thing, but you can see this 4 is much larger than that wave 2. If I can just sort of slide it across here, you can see this. This is supposed to be, there's a thing in Elliott wave is about having the right look, and this kind of doesn't look right. So I go to, let's go and find another count. So here, maybe it's best shown with this kind of count. So again, we're at that low point, 2022, and then we do 1. And instead of finishing 2 here, I'm finishing 2 here. And when I do this, I can only count from this point, really, 3 waves. 1, 2, 3, 4. So this 4 now, this wave pattern here is still a little bit larger than that, but it's more acceptable. And what would happen after this 4 is that you'd get a 5, and after that 5, you'd get some consolidation back in a 4, and then you'd have another move up in a 5, and you can kind of imagine what the price does. Let me just quickly show you kind of another pattern. And this is one that caught my eye when I was figuring it out, because if I look at things in this particular way, all right, I'd say 1, 2, and then I do a 1, and then a wide 2 here. It's not ideal, but again, bear with me. Then I say 3 in green, 3 green, as opposed to 3 3 yellow. And looking at this 4, it's going to finish, I'm saying, well, if it's going to be the same length, it doesn't have to be the same length, but it's sort of within reason. So I looked at the end of this, what that wave 4 would have to end if it was the same length as the wave 2, right? And it came up as August the 11th. And I thought, hang on a minute, I remember that date, August the 11th. Where did I see that? So I came back here and I looked at this thing, and I looked at this low, and this low was at August the 15th. So, coincidence it may be, right? But I kind of like coincidences in Elliott wave. And so I'm wondering whether really all we do is still, even though you're really bullish and even though the current cycles are somewhat positive, that it could well be that we still trade around. And it could be that wave 4, turns out to be a triangle. I don't think I've included that as an option, but, let's just show that. It's way too early. From an Elliott wave perspective, you don't do that. It's way too early to kind of consider these triangles until you see, at least fourth wave. But let's just sort of put that out there and decompose this and put out triangle. And so that's wrong. That won't be like that. C, D, that'll be an A.
Would it be one of the conditions that we have to stay in the box, Nick?
No. Again, the box is just kind of a nice time thing to make it look, to have this symmetry. And Elliott wave is all about beautiful symmetries sometimes. And, one of the things about that 4,103 was also it was exact to the day, the low. And, that's why, kind of my mind was like, this is a crazy coincidence. So the only sort of point about this sideways action is that wave C, if this were to be the case, would not be allowed to go below the wave A if it were a triangle, right? So this is how the pattern might shape up. And let's just say it kind of plays around for a while whilst the NASDAQ does its thing and the S&P does its thing and the Fed does its thing, because of, there are forces on both sides for Bitcoin. Remember, there's this 192 days headwind. It will become a tailwind, perhaps. And we've got some tailwind in the current cycle. So the current cycle tailwind and the 192-day or 200-day headwind, might balance out. Don't know. So I'm kind of looking at this thing and saying, I'm not going to get excited about Bitcoin until I see evidence that we're ready for a breakout, because what might happen, and I could probably show you on this chart maybe, just to see what I've got as a, yes. So what might happen is what I've got here on this chart is where, wave C, I don't know, so got another, yeah, so I do have the pattern here already. So wave C has to become, for the rules of Elliott wave, it would have to be 5 waves. And this, let's just get rid of this box here so that you can see it. So it could well be that wave C goes down here.
That would be a level of 45,000.
It would be, here we can do this thing Fibonacci. It would be 100% relationship of wave C to wave A, which is a Fibonacci kind of rule, if you like, would be 55,000. And if it were to go to 1.618 of wave A, then that would be 46,000. The other thing about Elliott, again, I don't want to make this like an Elliott teaching thing, because it's a Bitcoin teaching thing or whatever, but wave 4s, and if this is a wave 4, wave 4s usually end in the price territory of the previous wave 4 of 1 lesser degree. So if you like, this wave 4 is a green degree. Forget the tech talk here. And you can see that the colors I've got making up green is light blue. So the degree light blue, that had a previous fourth wave which spanned between 49,000 and 38,000. So, as I say, it could well be that that wave C takes that kind of shape. And there is one kind of non-Elliott wave thing that does cause me some concern about sort of getting excited about, you putting your hand in your pocket and buying some stuff, would be that if you look down here on this is a daily chart, daily RSIs. So the RSI formed lower, sure, in oversold territory, formed lower, whilst the price was still up. Now, I don't usually like that. I like it the other way around. I like it to see, the price lower with RSI being higher. And for that reason, I'm still kind of cautious about when and where and how and, what shape does this correction take and when is it over? And the way that you normally play these corrections is not to try and fish for the low. You could do it, it's a very brave thing, but you do that if your stop point, if your wave count invalidation was very close by. It's not close by because, it really could go down, as I said to you, it could go down here. It's 40,000, 45,000. People don't want to wait for that. So it's certainly not worth catching that knife. And what you normally do is you'd wait for some kind of a retracement evidence on the upside, that it's past 78% of a previous move or something like this, or the shape is in 5 waves, something that gives you evidence that the trend is no longer down and it is going up, and then to play that. So in summary, we are in this sideways pattern. The actual degree and stuff is still, for me, unclear. There are headwinds and tailwinds from the cycles. Still early August is an interesting date for me, and has sort of kind of kept me from saying to buddies of mine that phone me and say, "Can I buy it now?" And I say, "No, just wait, be patient." And that was, believe me, I that was already in May when I was saying, calm down. August, this is more likely a time to look for something. And of course, let's just say we're wrong about August. Let's just say we've already had the low, right? Let's just say that yesterday was spike low, it's gone up, this thing is going to go, to the moon. What would we be looking for? So we'd have to look for a much, the structure of the rally. So let me just change this thing. So let's say this point here was a significant low, that there is not going to be a 4 and a 5. Let's just say this was it. This was wave 5, and it was the low. So what you would look for is you would look for 5 waves up. Okay, could argue whether that's 5 waves up. It's not convincing for me. The other thing you would look for is levels of a retracement to, when things start to go above, where might this thing stop? So it might be that this thing, so the last big move, put it this way, was from this high, which I've labeled 2, down to here, 58,000, which was, yesterday, day before. And then we went up. Now, if this thing is going to go to the moon, what I would expect it to do, I should say, is to start to break these Fibonacci's. Firstly, I want to see 5 waves, then 3, then 5. And I want to see it break 78%. You're going to say, well, Nick, really, you really want to sort of wait 68,000? It's 61 now. We're going to waste 7,000. Well, yeah, because the downside is far greater if this thing does complete lower. So, it's best to be cautious, and whether this was a stock or Bitcoin or whatever, I'd still be looking at it exactly the same way. Wait for a break to confirm that something more interesting is happening to price action before you do anything. And I'd say that kind of level to kind of start phoning me again is when you see Bitcoin at 68,900. Give me a call. But until then, I'm still of the view the pattern hasn't given me any evidence that it is over. When I mean the pattern, I mean the sideways consolidation. I don't think it's over. There's no evidence that it's over, and therefore calm, wait is what I'd say.
That would have been my next question. Is there any plausible count that the whole Bitcoin thing is over? Have we seen the end of a large wave structure?
Yeah, I think you can do that. You don't need much imagination for this. Hang on. Sure, I've got it here somewhere. Well, okay. So you see that we have completed 3 waves here, up here, right? See that level? Yep. That says 3. Now, there is an Elliott wave pattern that says basically you've reached this high. So this is what we called wave 3. And then we're doing a 3-wave pattern down, which is what I count as a 3-wave pattern down. We do a 3-wave pattern up. And then we do a 5-wave pattern down, and that takes it back down to 15,000. That count is valid. Less probable for different reasons, but equally plausible. If you could count it that way, you're not sort of disobeying any laws. in Elliott wave in any way. But basically, you've got corrective waves can take quite complex shapes. And in this particular case, 3 waves down, 3 waves up, and then down in 5. That's one alternative. The other alternative, where you could say, yes, it's all over or very close to over, is you see that we've counted here since 2019-18 low, when it was about 3,000. 1, 2, 3, 4. Well, as I say, we counted 3. Let's just say we've done 4. And let's just say we just sort of spike up here to 78,000, 79,000, 80,000. Then, then you can stick a 5 on it and say, oh, game over. And just when everyone gets excited, our new high and the like, and, you've got to ship it in. And then, this thing counts to 5. I mean, in theory, that's quite possible. It's not probable because, it doesn't have the right look and all of this stuff, and with the cycles. So the cycles, as I say, sort of give you a kind of a sense that the end of the cycle pattern, if this thesis is correct, would be in mid-2025. So, timing-wise, I'm looking for patterns that would allow an extra year's worth of effectively a bull market in Bitcoin with consolidation on the way. And it just wouldn't fit that we kind of sort of shoot up in September and then start to collapse. So at the moment, that's not really my preference, and that's why. And I'm not really also favoring this count, which was the super bullish count. We say 1, 2, 1, 2, 1, 2, and then sort of 3, 4, 5, 4, because that probably sort of takes too long to complete the pattern. But it's plausible if these things happen fairly quickly, and so I'm kind of still looking for things that would, let's just say, finish sometime middle of next year, and that's where I am on this.
So for me to sum it up, this box we're in at the moment has the potential to be a sideways pattern till August, when the cycle also kicks in as a potential low, and that would take us then almost into the region, if I see that correctly, 100,000, right?
Yeah, I mean, we'd start to do some proper Elliott wave analysis here, because here I would say, okay, I'd start to look at Fibonacci length of ratio analysis, my wave 5 versus wave 1, and I'd say, okay, wave 5 versus wave 1 has a 100% target at 96,000. So that wave 5 in green, I don't know if you can sort of see it properly.
Yeah,
wave 5 in green would be the end of wave 3 at around 96,000. And that's the first Fibonacci target. Notice I've got here this number of 103,000. And I think I know I had these numbers. I've kept moving. They were over here before. And I've kept those numbers there for donkeys, I must say ages. And the reason I get these numbers is from this high, the previous high, which we got to in November 21. Then we corrected. So if you do a Fibonacci retracement of this to this, and then extend the waves, you will see, so if I just eliminate all of these things and just leave those two, so when you pass, generally, actually I should keep them because it's also 78%. I want to show, I'm going to get rid of all of this other stuff here. And yes, so when we passed 78% here of this retracement, that was a kind of a trigger for you to say, okay, that's usually when you break the 78%, I know I've said this to you a few times, when you break the 78% retracement level, your likely target on the upside, this works for stocks and currencies and stuff, is between 127.2%, and 127.2 is the square root of 161.8, and 138.2. So these are called reverse Fibonacci targets. And so breaking the 78% would normally target within that range, at least the low point, which is 103,000. So here you've got a cluster, or what's called a cluster of targets. You've got green wave V, green wave 5, has a Fibonacci target equal in length to its counterpart wave 1 at around 96. You've got a reverse Fibonacci target, 127.2%, 103,000. So somewhere up there is a reasonable target for somebody who bought the break of 78%, which was at 50,000, to be targeting, right? So that's basically what you would look for. And
so if I put that now together with the dominant cycle of, I think it was 200 days, and the slightly less dominant cycle, which was more bullish at 174 days, something like that, that
it was 143. It was the dominant cycle is the current cycle, 143. The kind of the standing cycle, the average cycle of a 200 days, 192, is the bearish one, and the current cycle, the dominant cycle, is going up 143, I think.
So what I would expect to see is actually that we're not breaking this holding pattern massively to the downside, because the interim cycle is working on the positive side. Why?
Yeah, I mean, that's kind of the thing. But when you look at these cycles for the first time, as you did, and said, I'm a bit intimidated, Nick, that's going down. And believe me, you, in order to be confident, really, it's either hold your nerve or be smart and reduce positions when you're at the top of the cycle. But hodlers like me just hodl. Yeah, I mean, in a bullish move, you're kind of hoping that this remains sideways whilst the cycle is going down. But it's hope. It's not really a strategy. I mean, but that's really a hope. If there are really 5 waves, then, as I say, I'm not really bothered about what happens in the meantime. I'm looking at the endpoint rather than trading it in between.
Can you add the 143-day cycle to it, or
this is here's the 146. It was 146 cycle.
Yeah.
So
yeah,
you could
see. You see my logic where I'm coming from. The idea is, yes, the dominant cycle is on a downward slope. However, how bad can it get when the interim cycles are saying, yeah, fine, there is some protection to the downside? Then combining that with what you just showed us on the screen, the box, which should more or less, in my mind, hold. And then we are drifting up till August again. Then we would have a scenario for a massive break. And I'm an equity boy, so obviously making 30% for me is a massive break.
Yes.
To the upside.
Yes, indeed. So generally, at the end of a triangle, you normally expect to thrust higher. Normally, the thrust measurement in Elliott wave is sort of, this logic is 20,000. So 20,000, let's just say wave 4 finishes at 60, somewhere in the middle, around 65,000. Add 20, you're at 85. So you're up here already. Add the fact that Bitcoin is a bit special, really wouldn't surprise, what happens when you get the market at 85. People say, oh, we're close to 100, or, going to buy the last. So there's still going to be people coming in at that level. And yeah, I mean, I could, it's all hypothesis and speculation, but if I was going to say, what's my game plan? And my game plan since May has been leave it the hell alone. And, it trades sideways. Coincidentally, this box finishes at the time that the cycle kind of has a sort of bit of a low. So that's interesting for me always. The corresponding bullish and bearish cycles may be adding to kind of keeping prices within this box as a triangle. It's quite plausible. But I'm afraid that at this stage, there's no evidence. If we just speculate and say, well, it could do this and it could do that. But that's the point. When are we wrong? That's the most important thing. When are we wrong? And this is the problem with the price action and the way that I've kind of counted this thing. as it is here on this thing. I don't know if I've got something different here. When are we wrong? We're wrong when wave 4 starts to enter the price territory of wave 1. Well, where's wave 1? That's down here. So you don't want that. So you can't do anything at this stage. Unlike there are lots of wave counts for stocks where you have kind of wave 1 here, wave 2 here, wave 3 here, the wave 4, which are very close to the wave 1. So you know when you're wrong fairly cheaply, whereas at this level you don't. So this is a much more difficult, very stretched position to kind of take a low risk bet. But as I say, for hodlers, who kind of bought into kind of the lows, you could just sort of raise your stops as we go higher. But entry points at this one, small positions, is what I would kind of suggest to people, and pick a level, a sensible level, where you would say, okay, that's just too much for me to bear. And as I say, when we looked at that Fibonacci point for wave 5, I think we did it on this one. No, not sure. Was somewhere around 55,000, wasn't it? Something like that would be a kind of a, if you can take that, then all well and good. I think we had it here, 45,000 as a potential low. 55,000 is 100%. So, for God's sakes, don't put your stop at 56 when 55 could be the key low. So, pick a stop level, sensible level based on where Fibonacci's are and where you could afford to kind of lose. But, again, when I look at this thing, it doesn't look like 5 waves to me. It still looks like 3. Right, and this doesn't look like 5. This, so it's all very difficult for me to kind of convince myself that we've seen the low. Is that higher than that? I wonder. Don't think it is. That will be significant. Don't think it is.
Well, it's one of the things we always. It's one of the things we always teach our students, Nick. Yeah, patience. What I want to have is a plausible scenario, what I have to look at now. And I think you demonstrated that quite well. If this scenario we were discussing with the cycles on top comes in August at these levels and we see this breakout, that would be, for me, a higher conviction trade than now getting already in.
Yes. So, we talked about, is there anything else that we can look at? And, we talked earlier about, well, it does correlate fairly well to the NASDAQ. NASDAQ's a little bit higher today, marginally. But when I look at, this is not the right count for the NASDAQ. Let's just go up here. When I look at the NASDAQ, I am sort of still obviously uncertain about which direction this is. If this was a significant high from last week, almost 20,000 on the I think it's the NASDAQ 100. I think this one is, not sure. And then we went down to 19,500. We've kind of come back to 19,700 and now 25 or thereabouts. It could well be, and you can see the kind of the pattern I've drawn here, whereby it's saying, well, there's a potential for this thing to go a little bit lower. This is if you're wrong, Nick, count. And this one would basically suggest that the high that we saw was not kind of the end of a particular wave, key wave. The low that we saw down to the 19,500 was just a wave 4, and that we need to finish wave 5 before we see the next consolidation move lower. So, again, even the NASDAQ isn't providing me with enough clues. And it's really all about the shape of these things. Are they 3 waves or are they 5? And it's so ambiguous. And I've, as I say, I'm not the only Elliott wave analyst out there. And I can't see anyone with any conviction as to what the shape of these waves are. And sometimes it is like that in markets. And when you see that, generally that's a warning sign to say, that's not something that gives you enough conviction. This looks a clear 3 down here. Look at that, 1, 2, 3. That's And if you're waiting for it, it's like, okay, I'm waiting now for three wave. Was there a Fibonacci? Can I buy this again? And things like this, there are obvious times. The moment it's not really that clear. So position sizing small, and so on and so forth, or just go on the golf course and save yourself some money, which I did that.
Well, I'm with you on the Nasdaq generally on the markets. I think something's about to happen, and that could, how do you call it? That's headwind, right? Could explode in your faces. The wild card or the black swan we have on there is again the election. It's Russia. It's the Middle East. You hear more and more threatening, well, comments about that. That could be now let me get that right. That could be the tailwind then for Bitcoin.
Yeah, I mean, well, tailwind or headwind, because we really don't know. I mean, at the moment, if you look at the dollar index, the Dixie, and if you look at what was going on with the euro, the EVZ, which is euro dollar volatility, I mean, it was sort of starting to spike last week. And, that could be French elections and all of the excitement about that. So there's people are kind of a bit concerned right now. And it's not, if the dollar was weakening sharply, then I'd say, well, the market's got a bid to it. You could probably sort of, take the more opportunistic bullish count in your alternatives. And, there might be a good chance for something there. But, with the dollar where it is right now, and as you say, with other stuff happening, with a very unclear Elliott wave count, because there are sort of various alternatives, with the cycle patterns, which effectively say, wait a little bit. I'd say, is this the time to take big bets? This is not like the time where you and I were on the screen, on the telly at 4,100 saying, buy this thing, right? Yeah. That was a kind of a no-brainer. It went from 4,103, didn't touch the sides up to 5,000. We are in a different world right now. This is a different market environment. And this one is one for maybe some day traders, perhaps, but they won't get to talk to me sort of intraday, as it were. So, but this is not that same environment. This is really a sort of a more cautious time, positioning smaller, the odd bet here and there. If you lose it, stay on the golf course a bit longer.
No, that's the right recommendation. No, but you helped me a lot already. I was, obviously, that's why I had this impromptu meeting with you. You pretty much told us on the short account that 70,000 was it for the moment. We've, just to repeat myself, we went to the level your latest count predicted, and that made me extremely curious. And we were already talking in our session lengthy about the cycles, and there was one brilliant analogy you put and said, Elliott wave provides you with potential targets, but not with the timing. And the cycles give you an idea about timing. And that is something where I thought, especially in markets like crypto, like Bitcoins, how many fundamentals are there? Not really a lot, right? But yes, if the technical analysis puts these two things together, at least I know now the levels where I could potentially get excited and said, oh, we spoke about that. We spoke about that 1.5 months ago. Actually, it happened as we forecasted. It would happen in a case where we have a bullish scenario. So when I see this around August, I will have that definitely in my calendar. I know what I want to do then. And by then,
obviously, absolutely. I mean, if I start to see different patterns developing, I'll as it were, alert you sooner. But for now, I sort of, it's the same thing with gold, right? Gold is see what we're doing in Bitcoin here. It's interesting. I haven't sort of looked at gold today, but where is gold? Gold's a little bit lower. So let's just quickly put up gold. Not that one. So here we are, and it's interesting. You see, I mean, look how, where is this thing now? Is that low still above this low? 2293, 2286. So here's a kind of a fascinating, that would be like this. So gold, interesting. This is quite interesting, and it might be a sort of pre-warning on Bitcoin. Sorry. I have to move that 4 to be strictly correct. Let me. Okay, I have to move this 4 to where the E is. If I can't do it, wait a minute, let me grab me. Maybe I'm not so dexterous as right now, but irrespective, gold has done this sideways pattern, and it looks like it is completing, there we go, this sideways pattern, which looked like a triangle, right? So that's how I've drawn it. Let's leave that alone. So you see this sort of, we had a high, a 2, 4, 3, 6, A, B, C, D, E. Plausible, bit like, one of the Bitcoin things. But look so this is what I mean about a low risk reward trade. So you're wrong if it does actually break this red C. And this red C is 2286, and we're currently at 2293. I mean, you're pretty close to a point where you might say, okay, bullish bet on gold, breaks 2286, or even this one, 2287, then something else is going on out. Very sort of, where you're wrong, because you've had that as your count, and you've said, I stick with that. So that's the kind of thing you want to see as somebody who's using Elliott to trade, as it were. But this is, gold is very, very close to negating a sideways pattern. And, what does that mean? So when gold starts to go down, if it were to break this 2286 or 2277, what would that mean? How, what kind of pattern is it? And I can start to think about what that would be. But, that sort of throws a lot of caution out there, because, gold was this sort of, it's your true risk-free asset and all of this stuff. What does that mean? And therefore, you might start to throw caution on what's Bitcoin doing, and what's going on in the rest of the market. So, watching this one more importantly than I am watching Bitcoin. 2297 moved up a tick. It's not out of the woods, but it's pretty damn close.
Well, if gold starts collapsing, that means one positive thing: peace in the world, right?
Yeah, I mean, I wish that's what it meant. Really, I do wish that's what it meant. If it, it's like, the dollar is going up, and it's, if it, you'll probably see it first in the dollar before you see it in gold, Anyway, so that's a small diversion. I know you want to talk about Bitcoin, but these things are relevant because the market is the market, and we trade all of these things, and they all kind of fit together because they're all in people's portfolios.
So then we have a little bit time left, because in the green room we discussed about how to best trade this stuff. Obviously, I'm an options guy, and I was looking at the future and options on the future. I wasn't really convinced about the spreads I did see there and the liquidity of the market. But you mentioned right at the beginning, maybe it's also a good note to close on. Coinbase was your proxy of choice. Was that correct?
Yeah, I mean, we looked at MicroStrategy, and MicroStrategy is okay to use, but I think, you looked at the open interest and thought that it's a bit thin.
Yep.
And Coinbase has a much deeper kind of sort of options market. And for that reason, it's, you've got more liquidity in Coinbase than you do in MicroStrategy. Remember, MicroStrategy is the company of Michael Saylor, who is a big Bitcoin guy, and his company is basically just one Bitcoin investment. How it is versus the NAV, I've not checked this recently, but obviously it's almost like an ETF, Bitcoin ETF. So, but Coinbase is probably as good a proxy as you're going to get, and then you can trade options, and then you don't need to worry about these crypto exchanges and all of this. Although Coinbase is one big crypto exchange, you don't need to worry about the risk of having your coins on this exchange or that exchange, or touching Bitcoin. So for some people, it's not so easy. But try some Coinbase, and I haven't. I don't think I've got a recent count on Coinbase, because there's only so much of the world that I can look at. But but I might have done this at some stage, is Coinbase.
Hey, let's save that for the next time, Nick.
Okay, we save it for the thing. Close your eyes.
Yeah.
Oh, look, there you go.
Because obviously my aim is to say,
close your eyes, everyone.
If we see all the wonderful things that might happen or might not happen, if you stop screen sharing, we have a little bit more space. Because I want to look in something where I can actually have also, well, I could take a risky trade while trading the right proxy if I have the tool options available. It would make my life far easier to say, okay, fine. If Coinbase would be the liquid market, which I can choose to do all these things, and you saw me a little bit bullish there earlier when you had the not so dominant wave in there or count, to say, fine, how can I do that without not risking too much at the beginning? If I'm wrong, I'm wrong, but I want to have a defined risk in these trades, especially about Bitcoin. I wouldn't trade in the future there. I'm not a madman. It's too little fundamentals, and volatility is well in the 70s, right? So just to give everybody who's seeing that, talking about Bitcoin, volatility of 70 means the market is right here, and the option market forecasts that the market could go up 70% up or 70% down. That's within one standard deviation, what is possible over a year's time. So you riddle me that if you invest your pension money, you don't want to have that kind of volatility.
Yeah, that's right. I mean, it's good that anyway we're an entertainment and education kind of outfit, but when you play these markets yourself, I mean, and understand the volatility in them, this is really small. I'm sure a financial advisor would probably say to you, small, if anything.
Well, Nick, let me finish on a note that I can't thank you enough.
Risk disclaimer at some stage in your
I put the risk disclaimer at the back, but everything we did today was no recommendations for trading, not at all. Pure entertainment and explanations of how different
Academy up there.
Exactly how different counts on Elliott Wave could work. So we've got that out of the way. I'll put it in the back anyway, and I can only say thank you very much, Nick. We have to do that more often, especially as you seem to be more often on the right side than on the wrong side. Which is, well, new to me. The concept Elliott Wave.
On the right side, right there.
Well, no, the Elliott Wave, the Elliott Wave thing, especially when you've talked about all fundamentals that they're out there in the market, and you talked about the algos, and you talked about the technicals. We're almost back into my world where everything is random. We have a big fat old bell curve, and what do I know? You've seen FedEx yesterday evening. FedEx shows good figures and a good outlook, and the stock is up 15%. I'm not doing earning trades in FedEx because every time they have bloody earnings, they go back to the level they used to be before when it's positive, 15% move, or they're getting crushed, going down to the same level again. Where you almost think, who knows theory of Eugene Farmer? Every information is already in the price until suddenly something new happens, and then the market adjusts instantly, which is actually the world I'm living in. What you can see in FedEx is that obviously the market completely got the volatility estimates wrong. The market maker move was something in the region of 8% was expected. So I haven't had a look at it now, but that's exactly the thing. So Elliott Wave gives me an idea to get an additional piece of information into the whole game. And I appreciate that, which I think our viewers will as well. I have something now in my calendar to look forward to. Maybe I will announce it when I do my first crypto trade. And then everybody can use me as, how do you call it, a contraindicator? And do the opposite.
Still waiting for you to buy NVIDIA. So.
And do the NVIDIA. NVIDIA over the last 12 months, I'm now positive. Yeah. So
okay, good. No.
there we're going.
I don't doubt that.
It just shows you have to have persistence and play small.
Yeah, I mean, then it works out. You show how to make money when you.
Well, I said that on Monday actually. One of my students, he took a manly short position in NVIDIA. Brilliant, kudos. And I thought, okay, what's out there? New stories. Wasn't really anything new there, and we dipped exactly to the. And I'm usually not a guy who likes moving average or flying monkeys there. We dipped down to the 21 moving average in NVIDIA. We discussed the macro case, still bullish. We're on reflation. Yeah, everything is nice. Numbers look good. Well, that's a bloody buy the dip territory. What happened? 6% up the next day. Huh? Even though I said to him, I hate NVIDIA. I want this thing has a correction 40% easy, 50% over the long term in it. But if you would have to tie me to a trading screen and say, take a decision now on the short-term data, I said, yeah, fine. Markets are trading technicals at the moment. That's what we're seeing here.
Yes. Elliott Wave is part of your toolkit.
We will work with that. Thank you very much for that, Nick. Any last words?
No, I think I might go to the golf course now. Did my work for the day.
It's too hot for me. It's already 28 degrees here. What we're going to do? Nick, have a wonderful game. And I hope our viewers enjoyed this little extra. Well, we talked about an hour again. So well worth your time. And I see you all, or we see you all, hopefully on Sunday with the next Grey Market Talk.
Looking forward.
See you soon. Thank you very much.
See you. Bye-bye.
Bye.